Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. We're going to be talking about dividend stocks that you guys should buy and hold forever. These are stocks that you shouldn't sell. You guys should turn on reinvestment and you should add to them as you keep progressing, as you keep making more money. These are the stocks that you want to add to constantly. It'll give you safety in your portfolio, and they're all around just great stocks. If you guys don't mind, I'm going to ask you guys to leave that early thumbs up on the video. Yes, scroll down, turn that thumbs up button to a blue, and that's all we need for you guys today. Subscribe to the channel if you want to join the community. We make videos like this every single day here on this channel. We do fun community things as well, so we all get along here, we all have fun, and yeah, that's that. Let's get right into the video. Alright, so before I give you guys the top dividend stocks to buy right now, I am going to tell you guys why exactly we want to have dividend stocks in our portfolio rather than the traditional growth stocks that we usually talk about here on this channel. First of all, price stability. Dividend stocks aren't as volatile, so they don't have as much of these swings, and they're much safer to hold on to if you want to hold on to a stock and just forget about them. They offer you safe, consistent dividend passive income even if the share price goes down. So typically you will be receiving the same exact dividend as long as it's a good company, and you will get that dividend no matter what. If the price goes down 10%, goes down 15%, you will be getting that same exact dividend, and that is why it is so attractive if you guys want to be able to obtain a certain amount of money per month, obtain a certain amount of money per year, be able to cover some of your expenses, etc. During times where capital appreciation is hard, i.e. a bear market, dividend stocks are your friend because the same point we said before, they pay consistent income. You don't have to worry about the stock price going up or down because you know exactly what you're going to be getting into. There are also plenty of stocks out there that are called dividend aristocrats who have raised their dividend on a consistent basis for over 25 plus years. So you know if you're getting into one of these stocks. Coca-Cola is like one of the biggest examples of it. It's Warren Buffett's favorite dividend stock, and that stock has raised their dividend consistently for over 20 years. I believe it was even more. So they're a dividend aristocrat. There's plenty of others out there. So these stocks are the ones that are especially safe when purchasing. Dividend stocks aren't nearly as volatile. You won't be losing 50% of your position if you invest in a dividend stock because they're much easier to value. The cash flows are more or less the same. The growth rates are more or less the same. It's very easy to see where that cash is coming from a financial standpoint, and therefore there aren't as huge price swings. When a company does not have sales, they do not have earnings, and the stock price is derived from earnings that are predicted on a future date, there's going to be much more volatility. And dividend stocks, they're already making money hand over fist, so they can pay you that money, and because of that, it's much easier to value them. Then with dividend stocks, there is DRIP, which is DRIP. It's an acronym, which is a dividend reinvestment plan. So if you own a dividend stock, let's say it gets a 5% yield, if you reinvest those dividends, I'm going to throw a picture illustrating this on the screen right now. If you reinvest those dividends back into the stock, you will yield a much higher returns because then you start earning dividends on your dividends, and it is more of an exponential growth rather than just receiving the dividends and taking out the dividends as a cash payment to yourself. So if you guys are having trouble stomaching some of the volatility that's going on right now in the growth sector, in the penny stock sector, then dividends might be your friend in the coming months. Alright, so the first dividend stock that we have here is Altria, ticker symbol MO. And if we scroll down right here, you can see that right below the PE ratio, you can see the dividend yield. So the dividend yield on this one is 6.75. So dividend yield is not the only important thing when investing in a dividend stock, but it is important in the fact that you need to make sure the firm can actually cover these dividend payments. So one of the most simple ways to determine this, and no, it's not the financial equation, we're not getting too deep into it, is if you go to the 5-year chart, if the stock price has been going down over the past 5 years, then that is a sign that they are not able to afford their dividend payment as much as some of the other stocks that have appreciated over the past 5 years. So with Altria having a negative chart going down 21% in the past 5 years, you can definitely see that they have had trouble covering these interest payments, and the firm's value has gone down as a result. That being said, they have gone up about 35% in the past year, and that is a sign that they were undervalued. Now, that being said, Altria does have a pretty stable free cash flow, and they can afford their dividend payment, and they are a dividend aristocrat like I was talking about earlier. So if you're looking to maintain that 6.75 dividend yield, this stock is definitely a good one to own. If any of these stock choices are in particular interest to you, I implore you guys to use the first link in the description and sign up to Public, because you get up to $50 in free stocks just by signing up. No deposit required, so you can get on your dividend investing journey by signing up for Public. I also just really like this platform. It's kind of just similar to Robinhood in the fact that its user interface is so clean, and it's very good for long-term investing. You can even pull up a long-term investment portfolio, so there's a feature that you can drag a stock into your long-term so you don't accidentally trade this stock or do something silly, and you can hold it for the long term. So dividend stocks, they're long-term stocks, so I really like Public for that feature. It's also like a social media investing app, so I like it for that, and it's just such a clean, nice to use app. So if you guys want to get up to $50 in free stocks, use that link below, sign up for Public, and yeah, back to the video. The next one that we have right here is Realty Income, ticker symbol O. So this one's an easy one to know by their ticker symbol because it's just called O. But as you can see, they're only up 1.74% in the past 5 years. So this one pretty stable, and as you can see, they were growing pre-pandemic, so they hit $82 share price, so they can definitely get back to there in the future. So there is some growth potential in this one, but as you can see, it's relatively stable, so you won't really be losing too much money, and you don't have to really worry about owning this one. Realty Income is a real estate investment trust, which is different than a traditional dividend stock in the fact that this one receives its cash income on a monthly basis through obtaining rent. They have notable assets in their management, and it's pretty easy to predict where they're going, which explains why they don't have too much volatility in share price. The next stock we have right here is QYLD. This one is a covered call NASDAQ 100 ETF. So they sell covered calls on the NASDAQ 100 to generate consistent income. This one's a cool one. If you guys have ever messed around with options, if you own 100 shares of a stock, you can sell covered calls on that stock. So they do this with the NASDAQ 100, and they generate passive income doing so, which I think is pretty cool. Just like the others, not too much volatility in the share price. As you can see, it is down 0.27% in the last 5 years, so you're not going to really gain money and you're not going to really lose money by owning this, but this stock has a 12% dividend yield per year, so you will be making 12% per year by owning this stock. Now be careful, because Robinhood says it is a 0.7 dividend yield. They might be getting that number differently, but I double checked it. It is about 11.88% dividend yield. So when using Robinhood, obviously always double check your sources and see that it is making sense. Use Yahoo Finance, use FinViz to double check your sources, make sure that you are getting the correct number. The next one that we have here is AT&T. So we're here on the 5-year chart. We see that they have lost money over the past 5 years. They're down 18% in the past 5 years. And like we've said before, that is a sign that they can't really cover their dividend payment to the full potential. They take out some debt, but AT&T is a company that's going to stay around. It's not going bankrupt anytime soon. It's AT&T. And I'm sure many of you guys use them as your cell phone service provider, and they're going to have some growth due to 5G and whatnot in the future as well. Their dividend yield is 6.37%, so they have a pretty high dividend. And there's not really too much more I need to say about AT&T, because it is AT&T and we know what to expect when getting into a stock like this. Alright, so here we have one of my personal favorites, which is AbbVie. So AbbVie is a biopharmaceutical company, And as you can see, they're up 85% in the past 5 years. Now, that could be a cause for concern because a dividend stock that is up that much in the past 5 years, it could signal that it is overvalued. However, recently, about 3 months ago, actually a little bit more than 3 months ago, Warren Buffett invested in this stock. And you know Warren Buffett, he has billions and over $100 billion of cash right now. So he's very risk averse, and he bought into AbbVie. So because of that, I like it a lot. And their dividend yield is 4.27%, which is pretty solid. Typically, any dividend yield that is under 7%, you should be seeing some growth with, or else it is definitely not an attractive company. The next one that we got here is HRZN, which is Horizon Technology Finance, excuse me. And as you can see, this one is up 37% in the past 5 years, which shows that it is strong, shows they can afford their dividend payment, and overall just shows the health of this company. So Horizon is a finance company like the name suggests, and they make out loans to these companies and they get paid the loans back. The interest payments on the debt that they issue does cover the dividend payments to you as a shareholder, so there's nothing to worry about there, and that's why this stock has appreciated in value. And it does a 7.45% dividend yield per year. So this is another one that you'll be getting a 7% yield per year, which is very good, and that is why I like Horizon. And the last one that we have here is the most safe one, and it also has the lowest dividend payment because of it. But as you can see, there is capital appreciation that comes along with owning this stock. So as you can see, it's up 52% in the past 5 years. This stock basically takes US listed companies that have high dividend yields and combines them into an index. So it is almost like an index fund, but for dividend stocks that have high dividend yields. So that is why I really like this one. It's very safe, it's very diversified, it contains a lot of different companies, and this is the type of stock that you can buy and just forget about it. Look at it in 15 years, turn on dividend reinvestment, you will almost have guaranteed to make money on this. So I really like this one. I personally have this one in my Roth IRA along with a few other companies that are a bit more speculative, but we're going to come down to the dividend yield, only at 2.8%. So not as good as the other companies that we've talked about, but like I said, much less risky. So this is one you can set and forget, and that's why I really like it. It's personally one of my favorite dividend stocks. Alright, so that's all I got for you guys today. Those are the 7 dividend stocks to buy right now and hold forever. If you guys want to have a safer investment than growth stocks, maybe you saw that some of your investments have gone down 50% in the past few months and you just don't know why, and you don't want that anymore. You don't want to stomach those types of losses, then consider buying dividend stocks. Dividend stocks, they make money, they have a positive free cash flow, so you know these companies are making tons and tons of money, and that's why they can afford to pay a dividend to their shareholders. There's much less volatility in the share price, so you won't be seeing the share price go up 100% in a few months. You won't see it going down 100% in a few months. But what you do know is you will be consistently paid for owning this stock, and that is a huge benefit. But there are risks involved, obviously. When a company issues a dividend, that money, that cash on their balance sheet is no longer on their balance sheet anymore. So subsequently, the stock price should go down if they do issue a dividend. Now, that doesn't always happen. As you saw, there are some dividend companies that do have growth, but the same holds true. If they never issued a dividend, they would have grown even more. So keep that in mind. Dividend is cash being paid out, and the company cannot reinvest in their operations using that cash. So they have much less chances to grow over time. So that is the risk that is being involved. And then some of these companies can't afford their dividend payment, and they don't want to decrease their dividend payment because that's very unattractive to investors. So their stock price goes down because they simply cannot afford the dividend payment, or they can afford it, but their company's value is going down because they're paying this dividend. Always keep those risks in mind when buying a dividend stock. It's not all sunshine and rainbows. Everything comes with a risk, especially when investing in stocks. We've seen the risk involved over the past 3 months, so we need to be careful of that going forward. A lot of these dividend stocks are at their all-time high because of the rotation to cyclical stocks, so I cannot guarantee you that these stocks in particular will be appreciating, but what you do know know is that you will be getting that dividend yield. So if it's like a 6% dividend yield and you put in $100, you'll be getting $6 consistently over the long term. So that is what is attractive about these stocks, and they're way less volatile. So if that's something that appeals to you, then definitely consider investing in dividend stocks. That's all I got for the video for you guys today. I hope you guys enjoyed. Remember, using the link below, you get up to $50 in free shares by signing up for Public. It's pretty much free money, so I pretty much recommend everyone to try it, but it's a great platform. So definitely check out that link. First link in the description. It's great. Subscribe to the channel, like the video, do all that good stuff. I appreciate you guys all watching my video today. It really means the world to me. So with that being said, that's going to be it for today. Peace.